got a brand which might be operating on a healthy 50% gross margin, 7% EBITDA, and you can easily be pushed into the red when the market or the government policies or Amazon policies for that matter move against you.
Or even if something happens in your ad account and you don't notice fast enough.
100%.
Or if like something happens in the shipping, you know what? Like there's so many things that can happen within the month, and then if you don't notice fast enough, you're in trouble. And sometimes people don't know till the month is over, right?
Every day we are reconciling the revenue and mapping it to the P&L.
So if I open it at like 1 p.m., I'm getting a view of how is my business at like 1 p.m. today, basically.
Right, correct.
Oh shit, okay, cool.
You have not just kind of a cool proxy dashboard with some idea of your financials, but you're talking about full tax-ready financials, which you can, at the end of the year, you can take out and you can give to your CPA and you can file your tax return based on it. I was tracking the brands which have been with Finaloop over the past 3 years. And if you look over the course of those 3 years, you can see tangible, significant improvements in their performance. So I'm talking about reduced OPEX margins by around 5 points. So if they were operating at, let's say, 21% OPEX margin, those brands are around 16%.
Amazing.
And increased EBITDA literally year on year of over 25%.
Hey everyone, and welcome to How Do I? Today's guest is Rafi Ganz. He's a UK chartered accountant who led global tax at Cape Technologies, a global IT security firm. And he also served as director at PwC before joining Finaloop. With his extensive financial experience, Rafi now helps e-commerce businesses transform their accounting from monthly headaches to real-time insights through Finaloop's AI-driven platform. If you're tired of flying blind with outdated financials, you don't want to miss this. So Rafi, we are talking about getting real-time financials today. Tell me why you're a good person to talk about that with us.
Sure. So hi, Matt. It's an absolute pleasure to be on the podcast. Thank you for inviting me, and also excited to be working together more broadly. So I'm Rafi, head of partnerships and business development at Finaloop. I'll start with just a bit background about myself. So my whole career has been so far in accounting and finance. In university, I was still unsure what I wanted to end up doing. But the advice I was given was that accounting is the universal language of business, and therefore it leaves the most options open. It opens the most doors. And they say that apparently 40% of CEOs of traded companies are accountants. So I guess there is empirical support assertion.
Cool.
So anyway, I was in Deloitte in London, worked in some really complex, geeky stuff in international tax. And it's interesting that already then going back about a decade, there was more than a decade, there was lots of talks from the leadership about tech, innovation, and even AI, which would transform the accounting industry. And there was an acute awareness that innovation in the market would become an existential threat if people get left behind, if firms don't innovate, don't keep up in the arms race. And it's true that hardly a month goes by when you don't hear about some massive billion-dollar investment, which one of the big four are doing. And even when I was there, we tried training AIs on different pieces of tax legislation, which was enjoyable at the time. It didn't go anywhere. It was probably too far ahead of times.
I see.
But for all the tech talk that you hear from big accounting firms, it's really, you'll be hard pressed to name any great tech which comes out from those firms. And there's many reasons for that. They are structured to sell services. They're incentivized differently. And on top of everything, the sheer scale of these organizations means that any one person trying to influence direction is like trying to steer a cruise ship with like a kayak paddle.
I was in a very small accounting for a while. They did not like any new ideas. So yeah, I can't imagine being in a big one.
Yeah, absolutely not. And, they have great reputation, they have amazing brands, and they're super protective of it. But there's a lot of bureaucracy, and there's a rigid partnership structure, which is accustomed to steady, predictable growth, not like VC-like investments, which means there's lots of posturing, looking over their shoulders. What's everyone else doing in the industry? Where's the next big idea coming from? But on a fundamental level, there's resistance to change, and rigid processes are like hardwired into the system.
And so were you doing AI stuff in these big companies, and were you doing it like with Watson, like that old version?
There was legislation which came out in 2017, which is some of the most complex tax legislation around, about the anti-hybrids rules. Part 6, a TIOPA 2010, if you must know. I was quite a tax geek at the time, and we tried to train an LLM because the thinking was that this is it's really contained, it's kind of self-sufficient, the rules are very complex, but it's all in one place. So it was a good place to start. But as I said, it's like kind of, maybe it was too far ahead of the times, or maybe there was just not enough appetite to take it further. But there was thinking, and there is, there is serious interest in it. But the breakthroughs are not coming from that part of the industry. I think that's fair to say.
Which LLM were you using? Because in 2017, I don't recall even hearing about AI.
I don't know. That wasn't, to be fair, Matt, that wasn't my department at the time. I was kind of in the technical side.
But that's like ages ago. I mean, that's so long ago in AI years, I guess.
Yeah, I call it an LLM now. I don't think that would have meant anything to me at the time. So yeah, but that was the state of play then.
Amazing. Well, so it sounds like you have pretty deep experience in finance and in tax and in trying to get better tech and AI. So our big question today, Rafi, is how do I get real-time financials for my e-commerce business? So tell us how we do that.
Let me just complete the story. So I moved at some point in 2022. I moved to Cape Technologies, as you mentioned before. And they're an IT technology, software and hardware company, a multi-billion-dollar business. They do both SaaS and e-commerce. Now, how many people, we're talking about like $2 billion business, over 500 million of sales. How many people do you think in the finance team there?
Oh, man.
Yes. Hazard a guess.
Well, look, I'm going to do one real guess and I'm going to do one funny one. So the real guess is for 2 billion, I would wager there has to be 30 people. And then the funny guess is like 9 because you figured something out.
So it was more than 80.
Whoa, really?
More than 80, which is less than Amazon's 40,000, but it's still far, far more than the average 0 to 1, which you find in e-commerce. It's crazy when you think about it. And Cape was very forward-thinking and a very talented team, to be fair. We implemented many new systems to streamline our financial operations, create better visibility. But it made me realize that the potential is so much bigger, kind of gave me a sense of what's possible on the one hand, and the massive gap which exists on the other. And at the time, Finaloop was actually growing very nicely in the offices literally across the corridor from me.
No way.
Leo, the founder and CEO, was partner in PwC when I was there, so we knew each other well. And eventually, after a few meetings by the elevators in the middle, he convinced me to join many of my ex-colleagues in building the future of accounting for e-commerce. So it's an interesting setup because, as you know, accountants they're not known for their exceptional sense of adventure and risk appetite. So it's not every day that you see a bunch of accountants become founders and innovators, right? They're usually the butt of the jokes for being the epitome of dull, right? I was reading Harry Potter to my daughter the other day, and I don't know if you remember, I'm sure you're familiar with the books, but I don't know if you remember the particular line where Harry asks Ron Weasley if all his family are wizards. And he responds, no, actually, my mum's got a second cousin who's an accountant, but we never talk about him.
That's funny.
This is very funny. It's the quintessential muggle in Harry Potter is an accountant. If you're an accountant, then obviously you're not a wizard. It just doesn't go together. That would be a step too far, even in J.K. Rowling's magical world. So Finaloop is quite unique. There's the founder, most of the product, marketing and customer service teams, which are all accountants and CPAs who were top of their profession in previous roles and made this massive pivot into tech. So it's a great and exciting place to be, and we really think we're changing the space. So I think kind of before moving into Finaloop specifically, what we do, I think kind of let's try, and it might be worth trying to identify the problem, because what Finaloop tries to do is give real-time accounting in a very accurate way. And that's the destination. That's where we're trying to get to, and specifically in e-commerce. And out of all industries, accounting in e-commerce is the most important on the one hand, but it's also the most complex on the other. If you think about a service business, the income and expenses going through the bank or processors, it already gives you a very accurate picture of the business. You're like 90% of the way there. I mean, I used to do the books of a SaaS company, which I had invested in, and it was like half an hour a month, if that, maybe a bit longer at the year end. Whereas with an e-com business, every aspect of the accounting breeds complexity. Before the cash hits the bank account or one of the many bank accounts, you have to deal with multiple sales platforms where there's complex platform fees, refunds, returns, discounts, shipping income. Funds are held in deposit in the platforms, then released to the platform, then paid out every X number of days. There's different payment solutions, BNPL, and then you have then you've got wholesale channels as well, which has its own complexities. inventory, that's why it gets really complex. How do you calculate your landed costs, COGS, and the tech stack? And loans also, those are essential in e-commerce, and there's loads of different funky financial instruments flying around. So it's not just hard. It's not just harder than average. It's like 20 times harder than any other industry. Do you think that's a fair assessment?
I do. And I think there's a few really key areas that you mentioned where I find people trip up a ton, which is when the sales comes into the platform and it's held in the platform and then it's paid out. Obviously, that 3 or 4 days is held in like a clearings account. Typically, we will have seen those, and those go off the rails regularly, completely off the rails, the clearing accounts. And so I find I've had to rescue a number of people from those. I've had to help other CFOs with those. And inventory is another really tough one. And then even like matching your actual revenues to the platform is hard. Yes, it's really, really tough. Yes.
Yeah, exactly. The data, if you think about it, the data is in so many different places. It's so diverse, which makes it even hard to even approximate accuracy if you don't really know what you're doing. Mm-hmm. And you don't have the time and the knowledge to do that. So like I said before, in most businesses, you look at the bank, that's already kind of quite a good proxy. In e-commerce, it's impossible to get any clear visibility unless you have a very efficient system to do that. Mm-hmm. And that's really kind of where Finaloop is, and why specifically that need is so strong when it comes to e-commerce.
Well, and I would say too that it's possible to get a clear view once a month and 15 days after the end of the month. But what you guys do differently is getting a clear view very regularly, right?
Yeah, absolutely. And if that's kind of the outline of the complexities of the actual accounting, to your point, the need to have the real-time data and kind of to have your finger on the pulse at all times is so much stronger in e-com businesses than other businesses because of the nature of the business, right? They operate on razor-thin margins. They have high working capital requirements, and they're very vulnerable to market fluctuations across the supply chain, from manufacturing costs, currency swings. You have changing consumer confidence and trends. Interest rates affect the financing, shipping, and of course, in the current climate, tariffs can throw everything up in the air. So you've got a brand which might be operating on a healthy 50% gross margin, 7% EBITDA, and you can easily be pushed into the red when the market or government policies or Amazon policies, for that matter, move against you.
Or even if something happens in your ad account and you don't notice fast enough,
100%.
Right? Or if something happens in the shipping, or there's so many things that can happen within the month, and then if you don't notice fast enough, you're in trouble. And sometimes people don't know till the month is over, right?
Yeah. You just can't fall asleep at the wheel, and you need the information to hand. It has to be more frequent than end of the month, exactly as you said, which is so much different other industries. The cockpit for all those factors and the decision making, the control for that exists in your financials, and specifically your P&L. There you can monitor the health of your business. And from there, you can identify and drill down into the problem areas. Is your OPEX bloated? Do you have a retention problem? Is it marketing efficiencies? Are discounts too high? Refunds? So to have that visibility in a holistic way, that comes from the financials, the three financials: the P&L, the balance sheet, and the cash flow.
I agree. Yeah.
And so e-commerce, it's not for the faint-hearted. You can do really well from it, but it has to be said, there's easier ways of making money, right? E-commerce is hard as a business, and having the real-time financials provides you with that agility to steer your business through the storms. You would know where you have the headroom, where shocks can be absorbed, and where you need to adjust your sales.
Yeah, that makes sense to me. Yep.
Finaloop, the goal is we take all those problems, all the diversity of data, and if we manage to ingest it correctly, absorb it and map it out, then we can actually turn that liability into a competitive advantage. So Finaloop will give you the real-time, accurate data across your three financial statements to put you in full control of your business.
And when you say real time, what do you mean by real time?
So we achieve that primarily through native integrations with the sources of truth. So we will have an integration, a direct integration with Amazon, with Shopify, with eBay, with Etsy, with Walmart. And we will ingest the data and map it onto the financial statements. So you have 100% of your revenue reconciled, broken down into P&L with no duplication. So you can see your gross sales, you can see your net sales after your discounts, after your refunds, returns, you can see your shipping income. All of that data is brought into your Finaloop financials in real time. And then on the expense side.
So, but real time, do you mean real time like once a day, or is it every week, or what's
every day? Every day we are reconciling the revenue and mapping it to the P&L.
So if I wanted to know, if I was using Finaloop and I'm like, how have I done? Is it when I open it in the morning, is it reconciled from the day before, or do I look at it at the end of the day to see how the day went? What would you suggest?
It's multiple times a day. I wouldn't actually be able to tell you exactly the frequency, if it's every hour or minute. I can get back to you on that, but that's what I mean by real time.
No, it's okay. But you're saying it's multiple times a day. So if I open it at like 1 p.m., like I'm getting a view of how is my business at like 1 p.m. today, basically.
Right. Correct.
Oh shit. Okay, cool.
That's on the revenue side. And then we're also taking the expenses, which are the transactions which are coming into your business, and we are auto categorizing those. So you have the full visibility of the P&L all the way down to your contribution margin and to your net profits. The one of the most tricky parts of e-commerce, which we mentioned before, is on the inventory side. We're pulling the units sold from the different sales platforms, and based on the unit cost, we're using that to create a real-time COGS calculation.
Cool.
And we're also data points, for example, loans. You upload a loan document, our system reads the loan document automatically and pushes the relevant accounting entries into the system. And at the end of the day, you have not just kind of a cool proxy dashboard with some idea of your financials, but you're talking about full tax-ready financials, which you can, at the end of the year, you can take out and you can give to your CPA, and you can file your tax return based on it.
You can give Finaloop the PDF of your loan document, and then it posts the entries automatically?
Yeah, so the way it works is Finaloop will detect when there's a loan in the system, and based on that, it will create a prompt of asking the operator to upload the relevant loan document. And depending on the type of loan, the most common loans in the ecosystem, which we're, for example, Shopify and PayPal, the system automatically reads the document and pushes the entries into the system on a daily basis. So you have your interest expense straight into your financials based on those loan docs.
Got it. Wow. Awesome.
The other thing which is worth saying, which distinguishes Finaloop, is it's built in kind of user-friendly, natural language. You don't need to be an accountant to engage with the system. It speaks to founders and thereby democratizes the whole financial know-how of the business by making it accessible to everyone. You may still want a finance controller or CFO on your side for advisory, for strategic services, but the system is easily accessible and usable by non-specialists, including the CEO and the founder, which is unique to Finaloop, and it's not the way that classically financial software has been built. I think I mentioned before that I used to do books for a startup, and as we scaled, we needed to move to a different platform. And so we wanted to upgrade the software. And I called up the software I was interested in to see if it was in the UK to see if they integrate with HMRC to enable me to file our tax return. And he was surprisingly honest in his response. He said, "We only provide that facility to accountants, and we need to protect the accountants." Meaning they actively closed me out from the filing feature to force me to be reliant on an accountant just for the filing. So that's what I mean by democratizing. There's plenty of, don't get me wrong, there's plenty of added value accountants can bring, and we have some excellent partnerships with them. But the added value should be real, strategic, and not artificial when there's a way of enabling CEOs and founders to engage more with the financials, which we think is a crucial aspect which is missing in e-commerce. To get a real understanding, to own the financial IQ in the same way that the owner of a business typically will understand their marketing very well, and he might outsource, he might use might use marketing agencies, but he has a good grasp of the way the marketing works and he owns the marketing IQ. So too, he should also own the financial IQ.
Got it. Cool. Amazing. Are you going to demo at some point the system as well?
Okay, so let's jump into the demo.
Yeah, so I'm loving, again, for me as a CFO, we create all kinds of artifacts and tools to help people get a real-time understanding of the business, but where they're estimates. And what you're saying is we can give you the actual non-estimated real-time view of your financial health. And not only that, in a way that people can understand, which is pretty intense. Okay, so what do we have on the screen?
I'm going to jump straight to the... So this is our demo count. So I'm just going to use where we've got the best data for an earlier year.
Okay.
And it just this is obviously the end product. This is already the financial statements. But I think it's just useful to remind everyone of the complexity which goes into e-commerce financials. So if you look down here, if we break down the sales, right, we can see the different sales channels. The revenue brought in, these are the actual gross sales you have from the different platforms. Each one assigned a different account. Wholesale channels, you've got shipping income, then you've got discounts and promotions from the different sales channels, then you've got refunds and returns, fulfillment, and the same with the costs of goods sold. You have direct, indirect, shipping and fulfillment, merchant fees. And it's just I'm just doing that as a quick reminder of the amount of data points and the amount of sources which feed into creating the financials. So we present that in our financial statements, of course, and that data, as I said, it comes real time. Cool things you can do on this. You can decide to view everything by percentage.
Oh, cool.
So you can see your margins, if that's more meaningful or not more meaningful, but also meaningful. You can, by a flick of the switch, you can do a month by month comparison. The data can all be exported whenever you want to either Excel, or you can have a live feed to Google Sheets. So you do a one-time export to Google Sheets, and it all updates in real time. So you can feed that into other templates, into management reports, investor reports, or to other forecasting models that you may have built yourself. So we play nicely with other tech and other models that are important to the businesses.
Fantastic.
Then of course we have the balance sheet and the cash flow. An important point, as you mentioned, is one of the really nasty points of e-commerce accounting is the cash, which could be in your bank account. It could be in the payment processor, or it could be still in the platform, deposited in the platform, or it could be held by Amazon because they haven't even deposited into your account yet. And you can see here, so without needing to do any manual reconciliation, that data is all pulled directly from all the undeposited funds, the UDFs. And similarly, you have a time delay, right? When there's a payout from a platform to a payment processor, so that money is kind of in the ether. And we track that because we have a three-way reconciliation between the platform, the payment processor, and the banks, so that we know that when there's a payout from the platform, it's supposed to be picked up by the payment processor. And therefore, if it hasn't yet, we know whether it's money in transit, or if it's sent to a platform, to an application which is not connected to Finaloop. Then that is something that we actively prompt the user that we see an unmatched payout. So we've got an asymmetry between the payout and the receipt, and there's probably a missing connection. So we alert them to that fact so that they can update us or connect the relevant account.
Cool.
As I mentioned, we're constantly automatically classifying the vast majority, over 90% of the transactions, and only on an exceptional basis where the vendor is, there's different ways of classifying the vendor, or for some reason the vendor is unfamiliar to us from our understanding of the e-commerce businesses, then it gets flagged for input from the operator. So here you have a visibility of the way all your transactions are classified. And you can go into any of those transactions. You can see the way it's mapped out onto the financial statements. If you want to reclassify it, if you want to educate us that this should be, you would like this vendor categorized differently, you can set a rule differently as an apply once or as an apply always. You can go into the transaction. This is a really cool feature, is you can spread the transaction. So if you want to create if you want to create an amortization over a long period, so let's say you've prepaid for software for a 12-month period, and you want to recognize that over a set time, you can just through one entry here, you can say when to start the spread, when to end the spread, and no more journal entries are required. And that will create automatically the relevant journal entry on a daily basis. So again, that's keeping up with that concept of real-time data. It's not like month end, okay, now I'm going to create the relevant journal entry. The system, by your instruction from the outset of the way you want to spread it, which is all intuitive language, like you've got an expense, how do you want to spread it? No debits, no credits. When does it begin? When does it end? And we do the journal entries on a daily basis to reflect that.
Okay. Cool. That's pretty intense.
Here, this is the start. I started from the financial statements, but this is kind of the main dashboard. But it's actually it's the icing on the cake, really, because these are the KPI dashboards, which is the next level. Here you get a snapshot of your business performance over time. Really cool recent feature is the SKU analysis. So here you can see SKU by SKU. What your margins are on each SKU, which is really crucial if you're thinking again about tariffs. Like where can I absorb the shocks of tariffs? Where can I see obvious problems? And this is the place to look. This will give you a clear visibility. What all across all my SKUs, which ones are the leaders, which ones are the loss makers? Where am I? Where have I got this? Cross subsidy of one SKU compensating on the others. You can see that either by units or on a dollars basis. And other more complex, more advanced metrics like working capital. We have cash conversion cycle, profitability. We've got contribution margin. All your critical KPIs, which originate from the data in the platform, and not just your data, but here what's really cool is that you can see all the benchmarks from the peers in the industry. So there's a toggle here, you can switch it to benchmarks, and you can see how your business is performing against similar businesses in, let's say I'm in health and beauty, I can benchmark myself against other businesses in that sector.
And again, this is accurate every day.
Yeah. So this data is so here your KPI, your dashboards are linked to your financials, which are real time. So everything is speaking from the same source of truth, which is a really important point, because there's lots of dashboarding you can get, but this comes from your actual financials.
So which is the other issue, right, that you're solving? Because in some cases you have to do a best guess. Like if you don't have this, for example, you have to create a dashboard here and a dashboard there, and you're guessing at what your profit is mid-month. And sometimes your profit mid-month looks one way, and at the end of the month it's totally different, and it looks completely different. But the beauty of this is it's actually your financials being reconciled every day. And so like what your profit is in the middle of the month is actually your profit, and you shouldn't expect a massive surprise unless something happens in the last 2 weeks. Whereas on the other way, you're totally guessing. So, are there situations where like with Finaloop, like, are there situations where you can have profitability up to mid-month and then like maybe something happens after? Like not unless there's a unexpected expense, right?
That's exactly the beauty of Finaloop. So you'll have the, if I look at it in mid-month and then there is an unexpected change and suddenly I have this I've been hit with a massive unexpected expense. So I can see that dip in the middle of the month and I can react accordingly. That's the competitive advantage. That's exactly the insight that Finaloop can provide.
Cool. Okay. So what, do you have anything else on the what Finaloop can do stuff? Because what I also want to get into, like, you know, how do I get the real-time financials? That's the question. And probably it's as simple as connecting everything and getting the setup. So like, tell us how do we set it up if that's the next thing on your agenda.
Maybe let me just touch upon inventory because I think that's something which is very interesting to listeners. So as I mentioned before, that we also make sure COGS is a critical part of the puzzle, obviously, and the way we ensure that you have a reflection of COGS in real time is through also, again, syncing with the platform. So when there's a sale on Shopify, when there's a sale on Amazon, how much did you sell? And based on your unit cost, we do the arithmetic and reflect that directly into your P&L. And this is, this is the equation this is the inventory equation. You have to get from your opening balance to your closing balance at the beginning, you're capitalizing the inventory that the system does automatically. It recognizes when there's an inventory cost, which should be on the balance sheet. And then, as I said, as things are being sold, whether that's through an invoice, whether it's a wholesale invoice, and you've added the relevant SKUs there, which can also be done through a sync with the inventory module here. So we know when something's been sold, either directly through Shopify or through wholesale or through a different sales platform, and the COGS are then calculated. So you can just see here that, like, for example, the products here are just synced directly from, just give it a second. So directly synced from Shopify. You have a clear visibility of your different SKUs. And then on the COGS side, you can see all your different, so here you can see all your different sales channels. Within each sales channel, you can dive into your SKUs, how many have been sold, and what your unit cost is, which the COGS is based on. And then of course, on the purchase side here, if you want to see what costs have gone into your inventory balance, here is the breakdown. So as we know, like it's a complicated equation because you have to take into account the shipping, for example, the freight, all that goes into your inventory balance. And then as you need to make adjustments, for example, if there's dead inventory or you've done a physical count and there's you have a new source of truth for the amount of inventory on hand. So you can just kind of make that adjustment directly through the physical count function or through putting that adjustment directly on, allocating it directly to a channel. And that way you can true up your COGS as and when needed.
Okay. Amazing.
And one more,
which is the other, besides clearing accounts, cost of goods sold is the other, like, most difficult thing for people to get, right?
Yeah. 100%. It's really tricky, and and there's always, you can only converge towards perfection, I guess, on COGS. But this is kind of a really good way of having a good sense of your COGS pulled in real time. So I'm not going to go into details now, but we have another option for inventory. Well, we actually have two other options for inventory. For those doing drop shipping and kind of work on a purchase-based accounting, so they just recognize, for example, the COGS as and when purchased, so you can opt into that system as well, which from an accounting perspective is much simpler. And then there's the more advanced feature, which is if you want us to calculate your landed cost for you, right? So you're not relying on, let's say, the unit cost imported from Shopify, but you want us to build up the whole, to calculate the landed cost from the source, from the purchase order. We have an inventory management system, which is integrated into Finaloop, where you
cool.
put in the purchase order into the system. You put in your costs, your indirect costs. Those indirect costs get allocated to the SKUs which you're ordering, and then you can actually track your inventory as they come into each warehouse. And when you sell, the unit gets allocated on a first in first out basis. So you have the real FIFO calculations if you want Finaloop to be also your source of truth for the actual landed cost and the unit cost. I'll just jump to here because it's just to understand kind of the way Finaloop works. So we automate those processes, and I mentioned a couple of examples. For example, the uncategorized transactions and the unmatched payouts. Where you have something paid out, but there seems to be there's an it's been sent to a payment processor which is not connected. So here we actively flag to the user where there's an action that they need to take. So another one, fill in loan details. We've detected a loan in the system. Let us know the details of the loan. Upload the loan document. We'll take care of the rest.
Can you click on that and let's see, what is it? Let's check it out. Again, simple language. Okay. And there's some loans.
Yeah.
And then a few of them need
action
an
requirement. Then you follow.
Okay,
so
cool.
It prompts you to put in what the amount is, related party, not related party, so we know how to classify it. And then eventually it asks you to upload the loan document.
Simple. Okay.
Yeah. So My Missions is is the portal for knowing where the gaps are in order to keep the system up to date.
Okay.
There was, what was the so I think Matt, then you were asking about how people connect, how
Well, yeah, right. Because I think at the end of the day, so I think what we've done now is we've demonstrated, why are we different from other people? Why are real-time financials important? And then how does it give you them? But if we want to ask the question, well, how do you get real-time financials? It's well, how easy or what does it look like to just set ourselves up on Finaloop?
Yeah, so great question. And the answer is unsurprisingly quite simple. So you go to Finaloop, and if you want to book a consultation call, you can do that. But in concept, you just log in, you set up a sign in, and then 5 to 10 minutes it takes to basically connect your accounts. Depending on how many accounts, it could take 5 minutes, it could take 10 minutes. The platform.
Is there any ability for you to demo the setting up?
No, I'm not going to be able to do that. Not
that's
right
fine.
now.
So go back to
yeah.
No, it's okay. So you go to the Finaloop website. You can click sign up. I'm assuming.
Yeah, you go to and then it will take you through a walkthrough process of which account first to connect the platforms and then the banks, the payment process.
So which platforms do you mean? So first we connect the platforms. Shopify. Okay, so Shopify, Amazon, Walmart.
Yeah.
Oh, yeah. And then when you want to connect a platform, you click a button and it does it opens a window to connect something. Oh, here we go. Okay.
Yeah, I mean, here you get a mapping of, because you can do it, obviously, you might, as the business develops, you might open up a different channel, right? So there has to be ways to integrate additional channels when you're already set up. So in each case, you receive the guidance of how to do it. There's specific instructions for each integration, how to set it up. And as I said, that can be done in a matter of minutes. And then the brilliance is that just based on that, within 48 hours, we will deliver your P&L for the past 2 months. So you'll have a good sense you'll be able to see your numbers within Finaloop. And this is before you've signed up, given us any payment details whatsoever. You can just get a 14-day trial with your numbers visible within Finaloop, which is a much nicer way of kind of trying to rather than demoing with some random numbers, like in this account, you get to actually see it with your with your numbers inside.
No way. No way. So, okay. So we sign up, we go to the settings page, we go to integrations, and we just click on any of the tiles that we have here for integrations, and you will pull in the data. So is it hard? Let's say you clicked Amazon. Is it very difficult to connect to Amazon? You just put in your password and then you guys connect, or do you have to install a private app and API key here or there, or like all that kind of stuff, or no?
It's not something I've done myself, but in each case, there's it's a very quick step, because the whole process, we've timed it, takes on average between 5 to 10 minutes. But always we give kind of the clear walkthrough of how to connect every single account which we integrate with.
So then you can also connect your banks and credit cards on a separate screen.
Yeah.
At the top there. And so again, you click on, so you connect your bank account. And presumably you'll have to go to a separate screen, do the sign in, then it automatically, it makes sense. Plaid. Okay. It makes sense. So it seems to me that to get real-time financials, you just need to sign up, connect all your stuff. Let's say it takes 20 minutes, and then you wait 2 days, and then you have real-time financials. And tell me about
so just to be clear, those financials, right? Those financials will be, it'll be the P&L on its own, just based on that data. So you won't have the balance. To do the balance sheet, we need to build the opening adjustments. That's something that's a further onboarding we do once a customer has decided to sign up.
Okay, so to get a real-time P&L, it's 20 minutes and you wait 2 days. Then to get financials in place, 20 minutes, 2 days. And then if you decide you want to go for it, we would then put in our bank or our payment information and get an onboarding call.
You actually have an onboarding call. You have a call with one of our accounting execs during that trial period. Mm-hmm. So they because it's it can still be overwhelming, right? Imagine you're an owner, you sign up to Finaloop. You might be accustomed to something very different with bookkeepers. Mm-hmm. So it's important that that customers have an onboarding experience. They get to speak to an accountant and they get to understand the way the system works. So a lot of the points that we've discussed already, they may have questions. Why is this number different to what I expect? And it could be often there is, because on average, customers have multiple bank accounts, multiple payment processors. It's not uncommon that they've neglected to connect something, Klarna or an Afterpay, or something's not there. And so we'll highlight, the point of this visualization is not kind of to necessarily use this P&L for your next major business decision, but to give you a sense of the way Finaloop works. And so we'll flag to you where the numbers are being pulled from. If you have any questions, you can discuss, and we'll also show you how the system brings everything together. And that gives people a very good sense of whether they'll be a good fit, whether they'll enjoy the experience or not.
So then if you think about full onboarding, and you get balance sheet and cash flow and P&L on it, and it's working in real time, from the time I sign up to how long does it take for me to get, if I follow the onboarding steps the way you set them out, how long does it typically take people to get financials going? And then, how long does it typically take?
It's a great question. To be here, it's more like how long is a piece of string, because I'm not sure if that's actually a fair expression, but it's very, very dependent on the data flow from the customer. So we have a clear workflow which kind of says you need to provide us with X, Y, and Z. For example, the prior year tax return, which is going to be a source of truth for the opening balances, and then there's follow-up questions, because let's say opening loan balances, because we need to make sure that we're totally synced with the sources of truth, because that's how Finaloop is built. When we open books and when we close the books, there's no approximation. We want full alignment between the financials and the source of truth. So how efficiently they can provide that data determines how long the onboarding can take. So it can be So it can be anything between, let's say, 1.5 weeks and 4 to 5 weeks.
Oh, okay. 1.5 weeks, 4 to 5 weeks. Okay. So, I mean, look, it takes on average, I would say on average 8 weeks for like a regular bookkeeper to take over your books if you're going to move. And it takes about 8 weeks to get everything humming properly. So you're saying on the outside view, guys, it could be 5, maybe 6, let's say, but like we're talking 8 to 12 weeks for a typical bookkeeping handover. So, I mean, significant time savings. And then once you're done, it's like, yeah. So how long does it take on the average month end or whatever, like to do the missions every month? How much time do you think is spent on missions?
It's a good question. And there it also would vary, but I'd say it's between 1 and 5 on average. Like to completely be on top of everything, make sure everything is there. It's a few hours. It could be as low as 1, depending on the unclassified transactions, or if there's new business and there's new types of business activity, or there's a new loan, then a bit more.
Okay. So, I mean, that seems fairly straightforward, on how do we connect? Anything else you want to add?
I'd just say let's take if we take a step back in terms of the benefits. So we've discussed in terms of the real time, the quality of real time data, the visibility that gives you to make quick, agile decisions, which are so important in the e-commerce industry. So that's on the one hand. You have actual cost savings in terms of your accounting tech stack, because you've automated so much. So there's definitely efficiencies to be derived there, both tangible and intangible. Tangible, like real money cost savings, as well as time savings. And when you're running a business, there's nothing more. Running a business is interesting, enjoyable. The frustrating parts is always where you're doing activity which you feel you shouldn't be doing, which is repetitive, totally. Yeah, right. The manual repetitive tasks. So we try to take that off people's chest and make sure kind of that if for nothing else, the experience of running a business is that much more enjoyable. But the other point is that, and Matt, this is really interesting, is that I really think kind of the discipline and culture, which having real-time financials where people are logging in frequently on a daily basis, creates a lot of awareness of their financials, which positively changes behavior and makes them much more conscious of where their costs are coming from. So it's not just kind of the agility of making just the awareness, the discipline and culture which it creates, has massive benefits. And the proof is really in the pudding. I was doing some data analysis the other day, and I hope to discuss this much more in an upcoming webinar, but I was tracking the brands which have been with Finaloop over the past 3 years. And if you look over the course of those 3 years, you can see tangible, significant improvements in their performance. So I'm talking about reduced OPEX margins by around 5 points. So if they were operating at, let's say, 21% OPEX margin, those brands are now at around 16%. And increased EBITDA literally year on year of over 25%. It varies different depending on the industry. There's some nuances, but on average, the average growth in absolute EBITDA year on year is over 25% for those brands, which is.
And this is because they're just looking and getting good data, and they're looking at it.
I mean, you can speculate. I'm sure there's market factors as well. But when you take it as a whole, and the kind of e-com as a whole has not performed brilliantly the past couple of years. So to see that kind of growth, I would definitely attribute that to the financial discipline, which I would attribute largely to Finaloop. We have actually, I can't remember who it is, but if you look at the case studies on our website, there's someone who makes that exact point about the way Finaloop influenced the way he engages financials. Whereas previously, it was like just a thing come year end, you give it to the CPA who does some makeshift calculations. It all becomes like kind of a regulatory process. To use that to your competitive advantage is a really compelling offering. As compared to people that are, the classic, let's focus on top line, just LTV to CAC or ROAS even, and it's just it's a very narrow focus. Nothing escapes the actual financials, right? The P&L gives you visibility across the whole line of business. And Matt, you're a football coach, right? A soccer coach. Right. So if you have like an unbalanced team where you have people running up front, and you forget about the defense, then that's going to express itself in the performance. And that's why having the financials, the whole set of financials from the gross margin down to contribution margin, down to net profits, and I can see how everything interacts. I can see where the gaps are, and then I can zone in on where the specific problems are. That's really, really going to help your business.
Okay. Amazing. Well, now we know how to get real-time financials for our e-commerce business. So thank you so much. And so I only have a couple more questions for you, and those are, we know what you're working on. You're working on Finaloop, but what is Finaloop working on right now? And how do people get in touch with you? And how do people get in touch with Finaloop?
So Finaloop here, so we are working on a lot of new features. We're constantly engaged with our community to understand what it is that they want. We're having a TikTok integration, which will be hopefully market changing. That's a big pain point in the industry. So that we'll have that soon. We'll have more data insights on the SKU analysis, which I showed you before, so that you can see more detailed analysis of your best performing SKUs, and the ability to basically manipulate and to analyze your data, to have the tools to do that, to drive more insights from the Finaloop data. I mean, if you think about it, there's so much. Because we serve so many customers, thousands of customers, the data set in Finaloop is pretty much the best on the planet, right? There's no one out there that has so much financial data as we have, and we want to make sure that can help derive extra value to our customers. So watch this space.
Amazing. Watch the space. And is it finaloop.com?
Finaloop.com.
What is it?
You can email me if you want, rafi.gans@finaloop.com as well.
Okay. Amazing. Well, Rafi, thank you so much for sharing your time and for going so in depth. I think this is going to be super helpful. And again, for people that are watching, we've heard the case studies, like people that are on Finaloop are doing better year on year, not just one time, but improving year on year. So, I wouldn't hesitate. And you're available in the US only right now. Is that correct?
Yes. That is a limitation. We're fine with foreign transactions, so you can sell from the US overseas. Yeah. We exchange transactions at the relevant spot rate, but the company should be based in the US.
Yeah, that's fine. So look, I would say that as a CFO, real-time financials would be a dream. So yeah, I mean, if this is something you're thinking about, I wouldn't hesitate. Yeah. So Rafi, thank you so much for your time. That's it for today.
Thanks very much, Matt, for having me.